Okay. Okay. Welcome, G3 investors. This is Greg Gallagher, and we're going to call this session Trade the Market You're In. Okay. It's been my, for quite some time now, ever since this move here and this move that we're in now, I am saying that we're in a bull trap or a denial phase. We're actually in an angry bear market, which is not a normal bear market, and that this pullback that we see here that went back to 218 and is now recuperated about 50% of the move, okay, the down move is a false rally, okay? So why do I say that? Am I trying to scare everybody to death? Well, no. I'm a black and white type guy. Now, I got these weird glasses on because it's supposedly a screensaver, so I don't go blind. I'm blind in one eye and can't see out the other anyway. But okay, we have the Global Purchasing Managers Index, which includes manufacturing services and a composite. You can just barely see the blue line, which is manufacturing, but it's below. That dotted line on the screen is the 50% territory. And, you know, you can see we only had a high of in the 55, but we were going down and then we went back up, okay, on all of them a little bit, but manufacturing still has not come back to where it should be. But now look at it and look at what's happened to the composite and to the services. And this is not good. This is the lowest I've ever seen this chart in history, since the history of this chart. So that's a bad sign. We're not going to come back. You just don't say, well, we put the stimulus in, blah, blah, blah. We're going to be back with a vengeance. No, you're not. Okay, let's look at, this is the Fed balance sheet, the total assets of the Fed. The Fed, by the way, is a private company. And, you know, some of its big shareholders are JP Morgan Chase, Wells Fargo, probably, I don't know. I know Goldman Sachs and Morgan Stanley and all those guys own a piece of it. So they're pumping the market by pumping money in. And who do you think that money goes to? Okay, it goes to the banks, okay, so that they can lend it out. But they lend it to, do they lend it to you and I? Very grudgingly, okay? I'll say that nicely. Okay, but they've pumped another $2.5 trillion in here. And look, that's it. And we say, oh, wow, Greg, the Fed to the rescue. That's been the put under this market for the last 8 years, okay? We've had zero interest rates or near zero interest rates. But here's the problem. This is the total amount of loans and liabilities that these guys, the real investment advisor guys, they're a good outfit. You know, they're fair, they're balanced. And they're saying, we've got loans and liabilities out there at risk totaling 10 trillion. So 6.2 trillion that's already lent out, and an additional 2 trillion is not going to fix the problem. You get it? Now, I've been telling you about Seeking Alpha. This is because I want you readers to read up on stuff. This is a buy and hold trader type group, but it's 500,000 traders or subscribers or whatever. So it's a lot of follows in here. I will point out the people who I think are fair and balanced, people who are just report stuff. This is one of the ones, Jill Malinsky and Doug Short. And I don't know, I think she writes most of the stuff. I don't know that much about them. I just know what I read, and what I read makes sense. Now this indicator, they show the chart of this indicator going back to 2000. Why I'm trying to point out is there's the big recession or bear market, if you will, of 2000. Okay, this thing only got down to minus 10%, but the recession started back here. See the little red dot? Let's go forward to the 2008, 2009 bear market. The recession started there. See that little red dot? It went down there. Okay, here we are now. We're tied at the red dotted line with the Great Recession, all right? And we haven't started the recession yet. So we're not even started. By the time we get done, this thing may be clear below the screen capacity of my screen. Okay. And it's amazing. Here's another look at it. I mean, you can read the article, you can stop the video or go back to the video and read the article, but it doesn't get any better. Here's another look at it. Look at where it's at. It's at minus 31.2, and we haven't started the recession yet. It's worse than it ever got in the Great Recession with our illustrious President Obama, the man that saved the economy and saved the world. If Donald Trump were only as good as Barack Obama, we'd be over this crisis. Let's get Joe Biden in there. I'm sorry to be political, but it's a joke. It's a freaking joke. All right, here we go. There's another look at it. I mean, we don't even have the gray started yet. And yet the talking heads on TV will tell you every day the market's up 400 points. The Dow's up 400 points. We've got a rally going on. I'll address that here in a minute. But all right, so let's get to what happened on April 13th. I didn't get this out last night. This is a new format. This is Zoom. I'm not used to it. So if I screw up, excuse me. I'm sorry. Okay. But it allows me to show you my entire desktop. So, and we could live trade sometime. And I'm trying to set up a trading schedule, say that, Craig, for Saturday the 10th. So if you watch this video and you're interested, let me know. I need feedback. We're a small group right now, but we need to grow. Okay. We have to spread the word. So I want to show you how I do this. Okay. First, I want to say welcome aboard to Marvin C. I don't think I introduced him. David M., Mateo M., and Carmen. These are the last four. These all KC72 was hired, and all these guys are in here. And I'm not knocking the tier 1 patrons, but because they might not have time to trade and they just want to learn. There's nothing wrong with that. I don't care. I really appreciate the good comments I've gotten from people. Questions. Ask me the questions. I won't always get to them. Okay. I'm a trader by day and I try to do this by night. So, and my CIO, as I call him, he's actually my grandson. He's a computer. He's actually works for a computer company, and he's an operations guy. Okay. So he's helping me with this, and we tried to do this last night. It was 26 minutes long, so we can't do that. So please help me grow my business by, telling people, giving this, send them in, let's get it going, and I'll get going here. Okay. Now here's what a tier 2 guy sees at night. Now this is a little different because this is the results of what happened. We ended up with 6 open trades going in today's open. And I already communicated what to do this morning, okay, to them. And I tried to do this video this morning, and the gremlins in my system wouldn't allow me to do it. I got to get that fixed. But anyway, we had 5 stop outs, 4 that were open trades, and then we had a stop out on the one trade, which I'll get to, that we do. We're in the market, trading the market that we're in. We're in a volatile, angry bear market. So I try to hedge the open positions we have, and I'm willing to take $150 loss doing it. Okay. We can't go long SQQ right now or TWM because we're not in the environment yet where when the market accepts bad news, which I'm going to show you in just a moment, and it goes up 400 points, that's not a market that you want to go short in. By the way, in my prior life with Model 1, I had a YouTube subscriber I tried to do this on YouTube, who basically said, hey, I'm just going to buy the SQQ. You've called the turn in the market. No, I didn't. I just said, hey, the market is negative. And this person said, well, I'm going to buy the QQQ at X amount. I said, hey, that's a great idea. We'll just do a study. You buy it at X amount and I'll trade it, and we'll see who comes out better. Well, in 3 months, the person lost 50% of their money, whereas I gained 3 times my money. You get it? If you don't, that's okay, but learn. I mean, I'm here to teach you how I trade. I'm not here to hold your hand. I can't do it. but I can show you what I do. Okay. And look, this is a volatile market. That was last Monday. That was the interim high the next day, and it did that. That was the last week. The green and the red and the dark green. Red means bad. Yellow means caution. Light green means good. Dark green means I ain't seen that before. Okay. I'm just trying to color code it to make it more interesting, because we see former CFOs and bean counters. We try to be black. We're like black and white. Well, here we go. What do I do for you? Oh, let me count the ways. I am going to track the major players or sectors as it comes out. Now, today we had earnings released by Johnson & Johnson. Okay. Actual estimate, better or worse, revenues versus a year ago. I don't buy the revenue thing, because these companies come out and and this estimate is a consensus estimate that I get from Zacks or Fidelity or somebody. Okay. It doesn't mean anything. I'd be better off to put in the estimate, the prior year numbers, but the market doesn't look at it that way. So I have to look at it the way the market looks at it. But it gained today, the last I checked, it's up 5.25%. Now you say, well, Greg, that supports the theory that all those talking heads on TV are telling you. Well, let me tell you something. This is where you're in a bull market when bad news is good news. Okay. Well, we're not in a bull market. We're in a bear market, but we're in a bull segment of a bear market. That's typical. That is typical of an angry bear market. Now, what happened? Why do I know that this is nonsense? Because Johnson & Johnson said our earnings for the rest of the year, they didn't say the next quarter, are going to be shite. You know what that means in German? I don't, but I've heard it before. It means they're not going to be very good. JP Morgan, they missed their earnings estimate by the biggest amount I've ever seen them miss. Wells Fargo made a penny. They missed their earnings by 95% or 99% or something. It's just, and they missed revenues too. They're down a little bit. If this was a normal market and they did something like this, where people weren't jacked up about Donald Trump and his administration and pumping $2 trillion is going to save this economy from financial ruin, I hope they're right. I am not rooting for America to fail. And in the long run, they will be right if he gets reelected. But what if the media, which 90% of the media is against this guy, 50% of the country hates his guts? Okay, how is he supposed to hold up during this? I think he's doing an amazing job. Okay, no, I'm not saying he's always honest and true and all that. Yeah, he's a New Yorker. He's a New York turkey. Okay, sorry, New Yorkers. I'm not trying to, I love New York. I used to travel there when I was in the oil business in the early 80s. Once every other month, we had board meetings in New York. All the financiers, all the money comes from New York. It's a great place to visit, but I wouldn't want to live there. Now, to them, they're like, there's no other place on earth to live. That's a New Yorker. They have egos. I have an ego. We all have egos. Get over your ego. All right. Sorry. I digress. So as of on yesterday, we were up $1,300 on these open trades, and we made $883 on these trades. Okay. That's good. But overall, the market, my thing dropped because we were up $3,000 on these other trades, and that dropped, or $2,500, whatever it was. It doesn't matter. So that's my point there. Go on, Greg. Okay. So remember the first chart I said we were going to get to. Okay, what are you doing here? There's the gremlins. We were going to get to 280, and that right there, you can't see it now because we're at 281.33. Okay, this is live. Okay, for this session, you're not seeing it live because I'm going to send the video if I can get it to work. So I thought we were going to do this. I actually thought here. Remember, I drew the picture of this and said that looks like it's a turn to me. Well, I thought this is going to turn. Why? Because that's resistance right there. That little line right there is the first line of resistance. Why do I know we're in a bear market? Because the SPY, which represents the S&P 500, is living below its 200-day moving average. And I don't care what CNBC tells you, what Bloomberg tells you. I don't care what Fox News, Business News tells you. And as long as the market's down below this, the average or most of them are below this right here, we're in a bear market. You don't just suddenly come out of a bear market. I just showed you that. All right, let me go on. Let's take a look. Let's look at the madness of this market that we're trying to trade in, because it's mad. It's a mad world. Okay, let's look at what we got stopped out of and why. Okay, here's the home builders. Now, again, this doesn't look as good as the previous one because we're no ways near that, and we're way below the 200-day. Okay, but what happened? When you get gap down, gap down, gap down, and you go down here and then you come up, I don't care what it takes a lot of muscle and a lot of technical damages happen to the market here. Okay, and you just don't go back up here straight up. You kind of go like that. And that's what we did. And so I changed things. Normally, under the normal market, when you're in a bull market, I will not get out of something that I'm in until I go count the bars. 1, 2, 3. It's just that simple. That's how the system works. It's not hard. Okay. And I would place the stop down here at 30 or something. Okay. And just let it ride. And then as I got up, I'd move the stop up to here, let's say, and then I'd move it up and up and up. You can't do that in this market. There's a gap up. There's a gap down. There's a gap up. There's another gap up. There's another gap up. That is nuts. That's crazy. So I just randomly say, hey, based on this activity here, if I get a gain and I'm up 4%, from this high, I'm going to take the money. I can always re-enter the trade. I'm not an investor. I'm a trader. So if you're here to buy and hold, you may be at the wrong website, because I don't do that. Okay. There's a reason I don't. There's a reason I double my money and double my money again. You make money by doubling your capital, your invested capital. You don't make money doubling your interest. You might over the long run, but I don't want to wait 30 years. I don't have 30 years. So I'm greedy. I want to make as much as I can right now. All right, let's look at XLB. All right, now this one was stronger, but still I use the same rule. I keep it simple, stupid. That's the KISS principle. I operate by that principle. You still got the same gap down pattern this way, and it's going sideways, and it went here, and then it surprised the heck out of me. Why is the materials sector up? Do you think DuPont and all those guys are going to go to town when the purchasing manager index is clear down here off the screen? Well, if you do, good luck with that, because I'm not convinced. Now, look, the market's proven me wrong, but they also haven't reported their first quarter of earnings. Keep in mind, the coronavirus really started, as far as the market is concerned, about halfway through March. Okay. They didn't even know it existed. They were all trying to impeach Trump. Do you forget that? Do people forget that? I think they do. I'm sorry to get so excited, but it just drives me crazy. They drive me crazy. Sorry. All right. So you see, I take it. Now, if it gets above 52, and I think this market turns and runs, right now we're up 1.7% on the Dow down here, and we're up 2.9% on the NASDAQ, and we're up 2% on the S&P 500. Good, great. Go, 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 go. I'll take it. If it gets up to 52, I'll get back in. What have I lost? Nothing, because I had a gain on that trade. I actually made $284. On XHB, we made $484. Hey, wow. Did anybody else do that you know that's buying and holding? No, they're down from up here. They're still in from up here, and they're hoping and praying we get back to there so they can get out. You know who's, I believe, is causing this? All the big guys. Warren Buffett's got $128 billion in cash. He wants 150. Then there'll be blood on the streets, because He's selling all the way this is going up. That's my humble opinion. I could be wrong. You trust Goldman Sachs, or as I like to call them, Goldman Sachs. You trust Merrill Lynch. You trust, well, I don't even know if Merrill Lynch exists anymore. Morgan Stanley and all these guys. Good for you. Good luck. I wish you the best. I really do. Okay, IJK. All right, now IJK, we got stopped out of this one. I was surprised. I was surprised we had that move. And there it is. It's going sideways again. Same pattern. I'm not going to go over it again. But again, this is the mid-cap 400 growth. That's a good ETF to trade because the mid-cap 400 is usually something that moves pretty good. We've made lots of money on this thing going up from 2017. IJT is the small cap 600, another good one to trade, another weak sister. And look, this is thinly traded. That's not a lot of volume down there, but I don't care. I just want, volume is just another. Okay, volume, I don't trade on volume. I trade on price. Volume is just another statistic in the game. Just like this line is a statistic. This line is a statistic. That gap is pretty big. This thing's got a lot of way to go. So I probably won't get into this unless it gets to 152.50 or something, because it doesn't look like to me that this is where I'm going to make my money at. Look at the volume. It's minuscule. Even here, it's lower volume, lower volume. Volume is the gas that propels the market wherever it wants to go. That's why we look at it, but it's a statistic. We make money buying high and selling higher. Yeah, I'd like to buy here, but I don't know that it's not going to go lower. Okay, so I can't predict. I'm not predicting the market. I'm following the market. All right, last one. I apologize for being so loud and crazy. It is me. It is I. Okay, let's look at the SQQ. Q. All right. Now, somebody years ago when we were down here said, look, why didn't you just buy right here? And it didn't go up like this. Okay, but it went up kind of like this, and then it went kind of like that. And I proved to the person by going forward. I didn't go backward and say, look at this. That's what all the analysts in the world, oh, let's look at this. And I do look backwards. But I only look backwards to see how it rhymes with the future, because I'm trying to predict the future, but I'm looking at from the probability standpoint, not the prediction standpoint. Is this the low on SQQ right now? See, if we would have held it overnight, okay, well, we would have gotten our head handed to us. So we didn't. So what did we do? What did I do? Okay, I have to go back. Sorry, I have to go back 5 days. This is going to be kind of hard to see because you want to ignore this right here. Because when I traded it, okay, this day, and I sent this out to the tier 2 players, I said, ignore this movement right here. We can't figure out what's going to happen. But when it got down here, I determined that based on that red line right there, which is, and I got to get rid of some of this stuff. It's too, okay. But you can still see what happens. Okay, it's a pretty good example. You learn from your failures. So I said, this based on this red line, I think we can get in at 1590 to 1610. And it was all based on that bar right now, right there. You can't see it now. I don't know how to show it to you easily, but the bottom of that bar was 1590 and the top was 1610. So I said, that's the range. Don't get in until it goes down here and comes back up. Give it time. It did. And I got in right there on that bar right there. And I got in at 1588. And I have to explain to you, I didn't do that on purpose. I did that. I think I can do it this way. Can I do this? Sorry. See, this is where, okay, I want to start from there. And I want to go to, no, I did that wrong. I want to go to 13. Nope, I screwed it up. Never mind. I am not the greatest, fastest fingers in the world, but I got in at 1588. The reason I did is because I do market orders. I don't do limit orders on that. So I got in at 1588. When it hit 1590, I hit the button to buy it. Fidelity bought it for me at 1588. That was me personally. and I don't trade everything that's on here that we got on the website, because the website is a training website. It's not there to say, and I don't recommend that you try trading everything. It doesn't matter. You're going to beat the model sometimes, and the model's going to beat you. It's just the way it is. But now you see, I wouldn't get in this market at all the way it's going, because that line is down. That's a trend. Hey, wow, a trend. The trend is your friend. Yes, it is. Okay. So there we have it. Now, let me see if I got something here. That's the wrong one. Okay. So what's the market doing? Okay. So what I just want to show you what the tier 2 people got today. They got this morning. And, I don't have what I said. And, so I'm saying, look, those things in light green will probably trigger. But I actually told them, I'll tell you what I said to them. I said, I wouldn't get in until I see which way this market's going to go. And again, why I don't know is because it gets decided right here at the end. See this big volume? Let me see if I can go back to 13 here. Yeah, there you go. Okay. See this big volume down? Okay, right here. Well, what that is that's who decides. They decide in the morning. This is the big boys playing in the morning, and they decide at the end of the day. Okay, and that's the institutional players, the Buffetts of the world, the hedge fund managers, the algos or whatever they're called. And what was I betting on when I got in here? I thought, well, shoot, this thing, I'll put a 4% stop on it. It's going to get me out. I think I got out at 1558, and I'm betting it'll go up here, because I thought the market was going to roll over on Monday. It didn't. It didn't roll over. Good. Great. I'm not against it. All right. Now, last thing. Okay. I don't know what theme to do, so I'm going to ask you all. We could do a theme. I did the Down Under guy, I did the Cowboy guy, I did the Ohio State nut, which is what I am. I did the Maui dude and the Down Under dude and all that. So I like movies. I like stuff. I could do that. I could do history. Like for instance, do you know what happened on April 14th? This day is a famous day in history. If you know what happens, it's not fair to look it up. You could, when we do a live session, you guys can put that in, or you can tell me at the end of the day, or it's just something to make it interesting. Another thing I could do is I could do movie quotes, I'll be back. So you have to tell me who said it and what movie it was in. That's an easy one. Arnold Schwarzenegger and The Terminator. But anyway, just trying to make things interesting. We like to have fun too, especially with all those people stuck in and can't go anywhere. It's kind of crazy right now. Okay, the last thing I'm trying to set up a live session using Zoom, and it'd be on Saturday, and that would be I think it's the 18th. Yeah, the 18th at 10 a.m. Eastern Standard Time. They can only last about 30 minutes, because that's all the more time you have on Zoom before they make you pay. And I don't have enough followers to make me pay. Greg Gallagher saying good luck and good trading.